Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, February the 16th. The year's 2023. Let's talk trading. Overcoming mistakes, part 4 with Walmal. These videos are for educational purposes only. Your results may differ from mine. Okay, today one of the things we're going to discuss is resulting. Resulting is when you look at the results of your actions and judge your actions based on the results versus judging your actions if you followed the plan, if you followed the statistics. It's one of those things where, the wisdom says, to follow your plan, to, focus on the procedure, focus on the process, rather than looking at the results. And there's a lot to it, because the thing is, you can do something that's really statistically against you, but it worked out. And so you might think, hey, I should do that. And then you get your face ripped off. What say you on that one, Walmall?
Yeah, absolutely. I mean, you can get yourself into a lot of trouble. The thing is, you need to have a game plan in place and you need to follow the game plan. And I know we talk about that over and over and over again, but it's just absolutely so true. And this idea of resulting, it's one of those things where it's so stinking tempting. You sit there and you take, like you just used the example, you go and take, you take a bet and, and because let's be honest, what we're doing, when we're trading forex, we're taking a bet. Okay. Now, our bet may be an educated bet, but it's a bet nonetheless. We're betting that the market's going to go in a particular direction. And sometimes we're right, and sometimes we're wrong. And the thing is, we go and take that bet, and why did we take the bet? Did we take the bet because whoa, news just hit?
Yeah, I know.
That
And I'm so
slam down.
glad I got out of those trades. Man, I was long, people. And I got out right before, about 5 minutes ago. It
Yeah.
market smiled upon me. Oh man, it hit the double O. I was so tempted to jump in long there, but no.
Good, good, good thing you got out of the streets and you got cleared of them.
Oh
That right there,
man,
that's see for me, my rule is get clear of the news, right?
right.
And there have been times when I just didn't do it, and I've gotten lucky, and it's very tempting to go and, oh man, I can go and do this. I know what it's going to go and do. Look at the previous candle. Look at the previous this or whatever. And the next thing you could be up 40 pips or you could be down 40 pips. Literally in a tick. I don't know if the video captured it or not,
Yes, it
but
did.
but literally in like one tick, it went down like 30 pips, one tick. It just like bam, and then the next couple of ticks it went down the rest of the way down to the double O. But man, it just moves like that, and that's that situation of you can go and get using your expression, get your face ripped off just because it worked out once for you doesn't mean that it's going to work out every time. And if you're violating rules, man, that's crazy. So for me, rule is I just don't trade for a couple of minutes before news. If I'm in a trade, a lot of times what I'll do is if I'm in a trade and I don't know which way it's going to go, market's going to take me, I'll go and hedge the trade,
Right.
just to go and protect myself, because I don't know what it's going to do, and maybe I'm more conservative than most, but I, my mantra again, preserve capital at all costs, and if I was long up there, I mean, I'm up like 20 something pips for the day right now. The thing is that would hit all my stops, and taken me out, and I would have gone from a pretty good day to a pretty bad day, all in a matter of less than a second.
Right, right, right.
And that gets right back to our topic of resulting. Just because it works once doesn't mean that it's going to work all the time.
Yeah, and
And
I was going to
go
say,
ahead.
the most famous or recent case of resulting was when the Seattle Seahawks were in the Super Bowl and they threw that pass and it got intercepted. and everybody was calling out the coach saying how stupid could you be, but when you look at the statistics, the odds of an interception were something like 1%. So
Right.
um
Yeah.
it's like the question is, would you do it again? Now the smart people would do it again. They would throw the ball, but when you result, you go, oh, I shouldn't do that. When actually
Right.
you should. It's just, sometimes it's like in poker, they would call it a bad beat. And if you want to, study up on it, it's, what's her name? Annie Potts. I
Annie
think
Duke.
Annie Duke,
Annie
that's
Duke.
right. Annie Duke. She's the one that wrote the book Thinking in Bets. And, as a
Yeah.
trader, it's a really good book to read.
Yeah, absolutely. I would even go as far as to say, it's a really good book to read, even if you're not a trader. Just a good book to read just for business. It's a good book to read just even for life decisions in general. And the reason why is because what she points out. She was a professional poker player, and what she points out in that book is the idea that you go and make a plan, make your short-term plans, make your medium-sized plans, make your long-term plans, and stick to your plans. Stick to it, because if you if your plans are based on fact, and that's and I know you say it all the time, Tiro, and I say it all the time also, but that's why you sit down, after the trading day is over, or maybe you take a trading day off, and you sit down and you write your plans when you can be objective, when you have the clear mind to go and look at the statistics, look at the frequency distributions, look at what you're doing, and sit down and put together a plan. Put together a plan for money management, put together a plan for your risk aversion, put together a plan for your methodology, put all those different things. And that can't be done in an afternoon, ladies and gentlemen. That's a long-term thing. That's something that takes, for me anyway, it took me close to a month probably to put, a lot of those things together. And I'm still working on it to a certain extent, but, that you need to go and have those things in place, because then once you have that in place, then you trade the plan. You execute the plan. You go and do it. And, and the good thing is that, the thing is with resulting is that we so often, we go and, base, and I know you said this earlier in the video, but we base whether or not we're successful or not on what the outcome was. It's got nothing to do with the outcome. Sure, the outcome matters, don't get me wrong. But the thing that really matters is, are you going and following the plan and executing the plan? Because in the long run, that's what's going to make you successful. You can go and have 1, 2, 3, 4 days that are bad in a row, and that's okay. As long as your plan takes that into account. And that's part of the money management part. Does your money management allow you to take 4 or 5 bad days in a row? Does it allow you to get yourself, to stay in the game, and not only stay in the game, but stay in the game in the position that you're able to continue to play? If not, then there's something wrong with your money management. Okay, we need to go figure out how. Once you know that, then we need to go and say, okay, what's going on with my money management? They'll take me out, because I don't care how good a trader you are. You can have a week that's just an absolutely horrific week, and it's a horrific week because whatever reason your particular methodology just doesn't work this week. There's no such there isn't the goose that lays the golden egg every time. It just doesn't exist. Forex is not a slot machine where you just put a coin in and you pull the handle and money comes out magically. It doesn't work that way.
It doesn't? I thought it was
Yeah.
supposed to work that way.
It's funny because so many people think it does, and that's I got an email this morning, in fact, from somebody, the Forex rapid money method. It's like, and basically the touting of this, if you read this email, it's sort of like all you got to do is just get an account, for $4.99 you can go. I don't know what it was, but I'm making it up. $4.99 you can go and get my foolproof plan, and you'll be making 6 figures. Like,
Yeah, well, speaking
I mean,
about that, there was a trader that asked me, what strategy that I guess they're a beginning trader, and I said, what you really want to focus on is just trade at horizontal lines. Like here, we've got the sweet spots spaced every 10 pips, and trade with the candle color at the line. And really work on your money management. So right now I've got a 1 minute chart. I might suggest if you're trying to scalp maybe a 5 minute chart, because you can look at the ranges here. You can see usually about the average is 6.6 pips. So here, if you would have traded short at 20, you'd be up a few pips. Um, and that's 5 minutes after the news, so things have settled down. And you can see here it actually came up, touched 30, and then reversed. But if you look at the dots, the indicator two dots, the magenta, it says, okay, I'm just going to look for shorts. I'm going to trade with the dots. So for example, in here, the dot was at closed aqua, and so I would imagine at the line it probably, I'm sorry, it closed, yeah, aqua. So it was probably aqua at the line there on that move. And that's just really focus on your money management strategy, because it whatever method you get into, once you're in the trade, it's about managing the money. You can, methods just tell you where to enter, what direction. But and you could say, well, part of the, they'll put a TP and stop loss on it, and okay, but that's still managing the money.
right, exactly right. All you're doing is just putting those. Basically, I like to say you're putting up guardrails to protect yourself, and as long as you're executing that properly, you should be okay. And you know, the thing is, and then the second part of it is, money management's number one for me anyway. It always has been, and I think it should be for any trader, because if you don't have the money, you can't do anything. Just that simple. So you got to go and protect that cash pot that you have. And then, like you said, just trade horizontal lines. Maybe that's a good place to start. And once you've done that and you have enough seat time, then you can start settling in as to, maybe this particular method is better for me because of my personality or not. For instance, as the traders know, in the beginning when we first started doing these videos, when I first started doing them with you, Hero, I did the Walmal trade, religiously every day. But I found that, yeah, I made money doing it, but it didn't suit my personality very well. And the reason why was because I had to sit and trade for 10, 15 minutes, sometimes 20 minutes, and, to go and get the pips. And that's just not me. I don't, I hate to say it, but I'm a very impatient person, and knowing that, I want to know that I get into a trade, and I want to know within like 2 or 3 minutes. I want to know, did I make money or did I lose money? And so that's why I started looking more at, for instance, the flip flop boxes and trades like that, because it suited me better, but the thing is, in the beginning, I don't think if I didn't do something like Walmart in the beginning, I don't think I could have gone and been successful with flip flop boxes, because it taught me to be very, very disciplined. It forced me to stay on cue, to go and stay and actually manage my emotions. It taught me to be very disciplined, even when I didn't want to be, from a personality point of view.
Right. So, fellow traders, the fastest 15 minutes in trading is just about over. So, don't always base things on the results of what you do. Make sure that you followed your plan and stick with your statistics and your analysis, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.